So I don't know if they run this scam any longer, but back in the day, you'd be in a parking lot, like a Best Buy parking lot, and a white van would pull up to you and there'd be two guys in there and they would say, "Hey dude, check this out. We just made a delivery and they messed up the order. We got an extra pair of these super high-end $700 speakers. But if you help us out, we'll help you out. Give us like $150. They're all yours and you'll have a credible deal." And I knew better. I knew this was a scam because it was too good to be true. So I had a friend call me up and say, "Hey Russ, you know what? I was shopping today and this white van pulled up. Let me guess, you bought a high yield monthly dividend stock." The speakers in the white van were too good to be true, and so are about 95% of high yield monthly dividend stocks. So I don't want you to be left holding the bag and get screwed when the dividend gets cut, because a lot of these companies have really high speculative yields to suck investors in, and they're pushing out most of their earnings into the dividend, going into debt for the dividend, and they're not reinvesting in the business. It's not sustainable, and at the first sign of troubled waters or headwinds, that dividend gets cut, people dump the stock, the value goes down, the dividend's cut, and you're left holding the bag. Don't be holding the bag. I want to help you out. I have 3 monthly paying dividend stocks that are the best of the best. They have been growing their dividend for 10 plus years. Before we get to that, if you are a proud landlord or you want to be a proud landlord, tag that. Let's see who's out there. And give this video a thumbs up if you are indeed a proud landlord or a future landlord. Hey, what's up? I'm Russ, and this is the one, the only Dapper Dividends here on YouTube, where we are building passive income through dividend growth investing because we don't want to work until we die. There will be links in the description below for all 3 of these investor presentations. Tons of information where I pulled a couple of these slides. Feel free to poke around, spend some time. There is a lot that they put out and try to sell you on about the company. First up is STAG Industrial. So STAG Industrial is the only pure play industrial REIT that is active across the entire domestic industrial real estate market. And what STAG does stand for is Single Tenant Acquisition Group. And some of their tenants are Amazon, that's their #1 top tenant, making up 3.9%. You got XPO Logistics, they do trucking, FedEx, and WestRock, they are the cardboard company, and Ford Motor Company down there with a little teeny tiny 0.8%. But check that out right here. The top tenants make up less than 4% of their annual base rent. So that's really good and strong. That means they're super diversified and not leaning heavily on those top tenants. And they do have property in all but 9 U.S. contiguous states. STAG has a current market cap of $6.47 billion, making them the world's 2059th most valuable company. STAG revenue looks good up and to the right, no dips, just a very nice progression upward. Their earnings were flat until about 2015, and it's been a little bit choppy, a little bit downs, but mostly again up and to the right. STAG's dividend yield currently at 3.65%, paying out $1.45 annually, but do keep in mind that is paid out monthly. The 5-year growth rate, not very good, 0.85%. So I would like to see that bigger and growing more. And the dividend growth is at 10 years. STAG Industrial is up 31% year to date, and the 52-week high is $43.55. So we're just a little bit off those highs. Going through their information, I really didn't like that they don't have a clear dividend commitment on any of their material, in any of their presentation, on their website. So I would like to see them say they're committed to the dividend. That would give me a better feeling as an investor. The increases are very small, so I'm hoping there are bigger increases coming down the line. And one thing they do that you should know is they only acquire property. They do not develop property. So we do own STAG for the exposure to the fast-growing industrial sector, and that's the sector that I work in and I know well. So I know things are booming, at least here around Chicago. And of course, those monthly dividends are always a bonus. Number 2 is ticker ADC, Agree Realty. This company looks very, very, very tasty. They are a retail REIT, so retail properties. As you'll see, they own 1,262 owned properties across 46 US states. Just a lot of great tenants that give me the warm and fuzzy, like Walmart, Dollar General, Best Buy, TJ Maxx, Kroger. You just go down the list. And the number 1 tenant sector is grocery at 10.8%. So we're always going to need to be going to the store and buying groceries. So I am super bullish that they have the bulk of their total percent in grocery, and home improvement is second. So just that's pretty strategic, and I like that a lot. 85% of their annual base rent is from national chains. Just, you've heard of them all. If you've ever wanted to be a Chick-fil-A landlord, bam! ADC is the stock for you. But just so many strong brands that everybody needs and loves. Agree Realty has a market cap of $4.64 billion, making them the world's 2,491st most valuable company. And again, just up and to the right, very, very nice growth. Revenue just very solid, money coming in the door, up and to the right. Many of these REITs have rent escalators built in, so they naturally pace and keep up with inflation. And same goes for the earnings, just up and to the right, no choppiness, just really solid earnings. Agree Realty's dividend yield is currently at 3.89%, paying out $2.60 annually. Again, that is monthly, which we love, and that's the theme of the video. The 5-year growth rate, an astounding 10.88%. Now that dividend has been growing for 9 years, but it's close enough. It's not going anywhere. And depending on when you're watching this, they're most likely already going to be at 10 years. And as of this recording, that dividend has grown over the last 10 years at 5.0% compound annualized growth rate. And Aldi, we shop at Aldi. We love Aldi. We can't invest in Aldi. They're not publicly traded, but we can become Aldi's landlords. Agree Realty is up 3.82% year to date with a 52-week high of $75.95. I like that Agree Realty not only acquires, but they also develop the property that mostly national tenants occupy. So I love it that they have strong brands as their clients that make up the bulk of their portfolio. I also love their commitment to the dividend. As we saw right there on the front page, they give a commitment to the dividend. They let us know that that dividend is on their mind and they want to keep paying that. And now we don't own any ADC, any Agree Realty, but after doing some of this research, they are very, very high on our list. And we will most likely be investing in them in the next significant pullback. Number 1, you know them, you love them. Couldn't be anybody else. It has to be the monthly dividend company, Realty Income, ticker O. I mean, just so strong. Check that out. 614 consecutive monthly dividends paid, over 6,700 properties. They're a triple net lease REIT, which means that the tenants pay the insurance, they pay the upkeep, they do the maintenance, they take care of everything. Realty Income just sits back, collects the rent and passes them on to us. Their top tenants, not a lot affected by COVID too. 7-Eleven, Walgreens, Dollar General, all at the top. And you can just see they have a very nice diversification, and the biggest bulk of their revenue is from convenience stores, grocery stores, drug stores, and dollar stores. Those aren't going anywhere, people. And you even get exposure to the UK with Sainsbury's, B&Q, Tesco. Never been any of those, but I'm sure if you have, let us know if you are a UK viewer. And Realty Income with a market cap of $25.71 billion, making them the 770th most valuable company in the world. And again, up and to the right, they, like most stocks, had that big drop in 2020, but they've recovered since then to all-time highs. Revenue very similar to ADC, just up and to the right, no dips down. Now earnings, again, we're getting up and to the right, but in 2018 and 2019, before the pandemic, the earnings started taking a little bit of a dip. So that is something to keep an eye on, and hopefully they can pull that up and start trending that in the opposite direction. Very healthily paying a 4.36% current dividend yield, which is good for $2.83 annually. Again, paid out monthly. The 5-year growth rate, 3.63%, so not as stellar as ADC, but still very solid for a monthly company, and that dividend has been growing. The cherry on top, 24 years. Dividend increases, you want them, they got them. 112 since their 1994 New York Stock Exchange listing, 96 consecutive quarterly increases. That is just hardcore. And they have been paying that dividend for 52 years since the company's inception. Again, hardcore dividend paying company. They are committed as all get out. And year to date, Realty income is up 10.34%. They had a 52-week high of $72.75. So I think those dividends could be a little bit bigger increases once they complete the merger with VEREIT. Now, VEREIT is another real estate investment trust, and they have a lot of overlapping tenants, and this is really going to make them even that much stronger. But we always have to be on the lookout for competition, and that may force Realty income to take bigger risks as their more traditional assets and properties. They have to compete for them. So it's just the nature of the business. I think that's going to be such a great thing when Realty income merges with VEREIT, and then they're going to spin off their office properties. And we did a video on that right here. So I would highly encourage you to check that out, find out exactly what that merger is going to entail. And I will talk to you there, proud landlord.